Hello traders, welcome to my channel. In this video I'll be bringing to you a strategy where you can be able to trade market structure. Many people have been writing me how to correctly identify the trend of the market, know when to be buying and to know when to be selling in the market, right? So we have a chart example of us, volatility 75. Mind you, these strategies you can use it for boom and crash, for forex pairs, NAS 100, whatever, because it is price action and it works for all market. So if you trade any of these, make sure that you watch the video to the end to know when to accurately predict the market, when to actually buy and sell. Right now, okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, vix75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. If you ask me when to actually buy and sell in the markets, I'll tell you that buy when the market is going up and sell when market is going down. That is, when the market is in an uptrend, be looking to buy, and when it's in a downtrend, be looking to sell. It doesn't matter what strategy you are using. If you want to use trend lines, if you want to use other blocks, if you want to use supply and demand, whatever, you have a better advantage if you are trading with the trend of the market. Now, in order to identify the trend of the market, especially for intraday traders, so people have been asking me, how do you correctly identify the trend, how to plot zones and all of that, right? If you're an intraday trader, probably you should be trading between the 1 hour time frame, the 30 minutes, the 15 minutes time frame. Right now, to look at your trend, to know what trend of the market is, if you just look at our charts now, which is the trend, which is obvious, what do you think could be the trend of the market? Okay, if you said an uptrend, then you are right, because now we're in an uptrending market, right? It's very simple. You simply see a series of higher highs and higher lows, right? This is what we call an uptrending market, right? So you see price creating highs and lows. So if you look to the left hand side of this swing, we have what? We have a downtrending market. We simply have what? Series of lower lows and lower highs. So from here now, you can simply be waiting for price to be pulling back to your key zones, right? You want to be looking for these impulsive and pullback moves right now, because if you look at our chart very well now, if you want to identify the trend, let me say you go to the H4 time frame as an intraday trader. Now from the H4 time frame, if you see a swing like this in the H4 time frame, right, you drop to a smaller time frame, you probably see a downtrending market. You probably see price getting lower lows and lower highs, right? It might look so straight, because in a bigger time frame, a one single candlestick here could be a complete trend in maybe the 5 minutes time frame. So if this is seen in the H4 time frame, it means you have a trending market in the smaller time frame. All right, if you come here, you see a swing like this, probably we have downtrending market. This is the H4 time frame, and here if you see a swing like this, it's clear we have a downtrending market, an uptrending market, sorry, in the bigger time frame or in a smaller time frame, right? So it's simple. So once you go to the bigger time frame, you already identified this, right? You can do your multiple time frame analysis. So what do you do now? You simply drop now to smaller time frames, like the 2 hours time frame, the 1 hour time frame, the 30 minutes, right? So from here now, you are going to see the trend clearer. Okay, you can see the trend clearer. It creates a series of highs and series of lows. If you drop further to smaller time frame, you are going to see the trend even clearer, right? And if you further drop even to smaller time frame, like even the 30, the 15 minutes, you are still going to see the trend clearer. So that is simple. So as you have gone to the bigger time frame and you have identified those zones, you drop now to smaller time frames. Now this is the time frame where you can be taking your trades. Now from this smaller time frame, you can use your tools like support and resistance. You can use your trend lines. You can use your supply and demand and all of that to take your trades, right? Now if you look at this swing here, it's clear that we are in an uptrending market, right? So let's go to the H1 time frame, filter out a little bit of the noise, right? So if you start from this swing here, for instance, if you want to sell, to trade here, because you have already identified this to be a downtrending market. So in the trend line lessons, I've told you guys that we want to connect the trend line. For instance, you don't need to make it too steep, right? You look for zones where you make it a gentle trend line like this. All right, you can make it a gentle trend line like that, and then you pull. Okay, so you just connect, you drag. I'm just using a trend line as an example. This is not fully concentrated on trend line trading, right? But it's to show you how to identify a trend how to take advantage of all of this. So we connect like this once, twice, right? You know that as price comes back and hit the third time, you know that we are in a downtrending market, for instance, right? And then we also have this zone to be key, like a key. You see this zone, this kind of support. We have this, could be considered by some people like other block. You can see those that green candle there, see those long bearish candles that form. All right, and here you can be considering taking sell trades from here, right? Because you already have many advantages, right? You already have the downtrend nature, you already have price pulling back from a key zone. And then if you want to sell here, for instance, you can sell, for instance, here, knowing that you have many confluences in your favor, right? And then you have your targets below there. All right, you can see there, right? You can see now how price drops so powerfully because it's actually respecting a key zone there. And then we are also trading with the trend of the market. So if price comes back and get and reject to the zone, some of you said I should explain rejection candles and all of that. Now you see that in a trend line zone like this, we have candlesticks that act as rejection or reversal candlesticks, and most often these candlesticks form like doji. You see strong wicks that are pointing upwards. These strong wicks that are pointing upward actually indicates that there is what the bulls try to push price up as the body of the candle open below, but the bears actually push the body of the price to close and making this wick point upward, indicating that what there is a sign of bearish pressure. And then at the same time we have it to be what a resistance zone. Okay, so this confirmation, you have trend, you have resistance, you have candlestick pattern and all of that. So you see that price will likely drop. So in this other situation here, you can see another situation here. Okay, price comes back and reject to the zone here. We have the same kind of candlestick doji pointing upward. So if you look at this rejection candle here, you see now that it's pointing upward as well. You see that long wick at this same zone here, and if you look at it very well, you're going to see this could still be considered for some people to be order block. Let's drop there. Now from here, you see now that price comes back and breaks this high. So when this price breaks this high, now you see now that it comes and fail to break this high and start creating higher highs. And from there, the trend of the market change. You can start looking for support zones, you can looking for liquidity grab scenarios like this. And then as price comes and breaks below this support and breaks above, you can start looking to buy, right? You look for buy, and then you come here, it breaks, you wait for price to close above, you buy. You can also use our trend lines in this situation, because in this situation now we have what a down an uptrending market. So you want to be buying here and you want to be selling. You can still identify situations of other blocks, right, and wait for price to pull back, and then you are entering. So you see, it's important, no matter what type of strategy you are using, to be using trading with the trend of the market. You will have a greater advantages of winning trade. So thank you so much for watching. I hope you found the video helpful. If you did, just give me a thumbs up. Make sure you subscribe to the channel if you are new by hitting on the subscribe button and notification bell, so that anytime I post a new video, you'll be the first to get a notification. See you in the next video.